Welcome to Block Time, a podcast powered by Riot Platforms. My name is Pierre Rochard. I'm the VP of Research here at Riot. And with us today, we've got the VP of Financial Operations, Kevin Haugen. Kevin, welcome.
Thank you, Pierre. Great to be on.
Happy to have you on. We've been meaning to have this conversation for a while because I think that your knowledge base and your day-to-day expertise is something that a lot of people are curious about, both from the public, but also from kind of Bitcoiners. And you're, I think, closest to the electricity markets from the perspective of, the company. So I wanted to have you on, ask you the tough questions, clear up some of the reporting that's out there. So thanks for coming on. First, I think we should talk about your career and kind of what your background is and how you ended up here at Riot.
Yeah, so I got into Bitcoin in a little bit of a roundabout way. My background's in finance, and under that kind of framework where I learned finance was actually under a value investing framework from Warren Buffett. So the first time I heard about Bitcoin was kind of under the guise of Warren Buffett, which is, he's not a Bitcoin maxi. So I kind of had a skewed view on it. And then when at one point in my life we moved to London, I was working in the UK, kept my US credit card, was getting paid in GB and British pounds, and then was having to pay off my US credit card. And it actually turned out it was cheaper to convert GBP to USD using Bitcoin than actually using like a commercial bank exchange rate. So when I moved back from London, that's kind of how I decided, there's actually a use case for it. I want to try to get into it. Started looking around and ended up at Riot.
Awesome. Yeah. So that's really interesting. I think that for people who only live in one country and only ever deal with one currency, they kind of just taken it as a given that, hey, like there's one currency and it's whatever the local currency is. Because I had a similar experience growing up. My family moved from France to the U.S. and then we moved back to France from the U.S. And my dad's salary was paid in dollars. And I remember dinner time conversations of, hey, do we convert these dollars into euros? Like what's going on at the exchange rate? And so, thinking about exchange rates was already like something I was comfortable with. And, when people talk about Bitcoin's volatility, it's like, well, sometimes it's in your favor, sometimes it's not. More often than not, it is in your favor. So from the Bitcoin perspective, that makes sense. From the energy perspective, what was your interaction there from a career perspective?
Yeah, so background, I worked on financial advisory, mostly in oil and gas. So I spent close to 8 years in oil and gas, actually some renewables, doing kind of IPO transactions, and then any kind of debt and equity, financing and structuring. And so that kind of background in commodities, and then growing up in Texas, right, just being exposed to oil and gas. So that background, I'd had that exposure, and then coming to Riot, electricity is our biggest input to the business. And so once getting on board here, realizing, hey, there's a pretty big opportunity on the energy side, and just kind of slowly working into it.
Awesome. Yeah, it is kind of the biggest like variable cost. It's often hard to go through like all the different businesses Riot has under its umbrella, because like when we changed the company's name from blockchain to platforms, some of our critics were like, hey, they've lost confidence in Bitcoin or something, which was really not accurate at all. What it was a recognition that our business has many different parts to it. Real estate business, we got to find the right places that have good internet connects on ERCOT. Construction business, we got to build these really custom data centers that are unlike the existing data centers. Hosting, whether it's self-hosting or hosting for others, and then mining, and power, electricity. So the on the electricity side, if we look at Riot's history, I think that we could start it at Windstone entering into a PPA with a wholesale electricity provider that we won't name. um, that that was kind of the first energy play that we had. Do you know why Winston entered into that PPA at the time? Was there like what the thinking was?
Yeah, so Windstone actually, it was a hell of a timing. It was during 2020. I think oil prices were negative, so you could actually go out and someone would pay you to take their oil. So the market was fairly inefficient, and the forward curve for natural gas had plummeted. So I think they had been waiting around a little while, waiting to see, is there a good entry point to actually enter into a PPA? And so that opportunity in 2020 it really presented itself, and they were able to execute on it.
And at the time, that was Windstone before Riot had acquired Windstone from Northern Data, I believe it was. And they were locking in that rate, or we at this point were locking in that rate for kind of third party hosting contracts. Now, since the acquisition, Riot has really focused on self mining rather than institutional hosting. But those contracts are not like you would for a residential house, right? They have provisions in them that are particular to kind of the scale of the contract. You want to talk about like take or pay and kind of those things that are in those contracts?
Sure. Yeah. So it's quite a bit different than your residential contract that you'd have at your house. So your house contract, right? Like we all live in Texas. We have similar energy contracts. We can pick our retail provider. We have a fixed rate throughout the year. It's probably, our rates are probably between like 11 and 13 cents a kilowatt fixed. So Riot's contract is a fixed price throughout the year. However, we have to pre-purchase the power whether we use it or not. So at your house, you only actually pay for what you use. At Riot, we pay for the power whether we're using it or not. And when we choose to not use it, we can actually then take what we've already bought and then just resell it into the wholesale market.
And there's also, I think, something that would be unusual for residential would be putting up a massive upfront deposit, getting collateral called, if the electricity price goes. Do you want to talk about those two pieces of it?
Yeah, so we actually our energy contract, a good way to kind of think about it is like a car, right? So a car, right? You've got to go out, you've got to buy this asset. It takes a lot of capital to buy your car, but then you're going to use that car. In Texas, like we don't have great public transportation, so you're going to use your car to get to work. But once you own your car, you can do multiple things with that car, right? You don't only have to go to work with it. So the way that we kind of think about our power contract is we own this asset. It's got a significant capital collateral that could be called. So if the forward market changes and the wholesale energy price in the future is going to be less than our fixed price, we could actually be capital called and have to pay for that difference on the contract. And so when we think about the optionality that we can have with our car, have you heard of like Turo?
No.
So Turo, it's like it's an Airbnb basically for cars.
Okay.
And so basically you can sign up, you could register your car on Turo, and you give someone the option to basically take your car from you for a day if they need it, similar to Airbnb, right? And so when we think about some of the options we can use with the ancillary market, is kind of similar to Turo. So ERCOT will pay for that option to take your car from you for a specific set of time. And so when they actually then execute on that option, we'll then give the power back, shut down operations. The grid can use that power, to power homes if there's a shortage on the grid. And then, another option would be you could potentially lease your car, right, for an extended amount of time if you don't want to use it.
And the reason why ERCOT wants to acquire that option, um, I think this kind of gets muddled. They have a reliability mandate. They're trying to maximize reliability of the grid, um, and from some of the recent reporting, sometimes it gets seen as ERCOT's mandate is to have low prices for the electricity market, or to kind of redistribute resources on the market. And the reliability part, we kind of take it for granted when the grid is working. And then when
Sure.
it's not working, everybody is, pointing fingers at ERCOT, even though, hey, they prevented a total blackout of the Texas grid during Uri. I mean, I think that they actually, from my perspective and my read of it, and nobody's perfect, but they were heroes in that situation of preventing the worst possible outcome, which should be a total meltdown of the grid.
Yeah, so ERCOT, they've got two kind of main responsibilities. One is grid reliability, and then the other one is just facilitate a competitive wholesale and retail market. And so there's like two competing camps, right? On one side, you've got people that are saying, okay, we want grid reliability, and then the other side is like, hey, grid reliability is expensive. Can we reduce cost? And so it's just two camps always fighting. And it's always going to make headlines when one side wins out, right? In some significant weather event. So, like for Uri, you had reliability. The reliability side lost on Uri, right? And ERCOT was at the price cap for multiple days, so it was an expensive event. And then after that, everyone came out and like, hey, we need more grid reliability. So after that event, they upped some of the requirements for ancillary services, and then now we've got this event this past August where you've got the other camp coming out saying like, hey, is ERCOT paying too much for grid reliability here?
Yeah, and I think it's probably easy with hindsight because we know what events materialized, but looking forward, it really is about risk management, and there's a wide range of probabilities, and it's more art than science in the sense that it's not actuarial, right? They don't have the necessary data to really conclusively say, okay, it's a normal distribution. Here's what's going to happen with the wind. Here's what's going to happen with the temperature, et cetera.
Yeah, no, ERCOT, I mean, they did a hell of a job too in August. I don't think we had, to my knowledge, no significant blackouts. And this weather event, right? It's like 50 days in a row of 105 plus. So the fact that, they were able to deploy ancillary services, I think in August it was every other day they were deploying it. That really ensured the reliability. There wasn't these significant blackouts.
That's right. No outages. I think the worst was EEA2 notice that ended up really being more about transmission more than anything else. And with the grid growing at the rate it is, I think the hard number I heard was 8% net peak load increase year over year. Transmission constraints are going to crop up. And I've heard engineers talk about when you fix one constraint, all that does is make another constraint apparent. That you're never really like, oh, we fixed all the constraints. You're just trying to balance the economic cost of building a power line versus not. When we're thinking about ancillary services, and it has this value to the grid of, okay, we're going to be able to have a cushion in case particular scenarios materialize. And I remember before this summer when they were looking ahead at the kind of the resources that they have, ERCOT and the PUC said, hey, in some scenarios, we're at the mercy of Mother Nature. Just because of the fuel mix we have on the grid, we don't have enough batteries, we don't have enough peaker plants to, and that we're going to have to cross our fingers sometimes because of that. And, as you said, no blackouts, no brownouts. So we did scrape by. But what I think that a lot of folks were looking at in terms of price was we hit that $5,000 a megawatt quite often. And, people accuse Bitcoin of being volatile, but electricity prices in Texas will go from like negative overnight to $5,000. These are wild swings. So, like, how do you look at that? And yeah.
Yeah, so I think electricity is the most volatile asset in the world, right? Like, I don't know of anything else that goes, it'd be noon and be $20, and then at 12:05 it's 5,000. And some of I think there's been some criticisms over the price action in ERCOT in August, and it's acted a little differently this summer than it has in the past. Are you familiar with the value of lost load
Our audience
concept?
is not.
Okay, so there's a concept in ERCOT, which this concept sets scarcity pricing, and it's called your value of lost load. So, and the scarcity pricing adders in ERCOT are referred to as the ORDC adders.
What does ORDC stand for? We're gonna give a ERCOT 101 here for folks.
So that's your operating reserve demand curve, and basically anytime that ERCOT's got like a physical reserve capacity, right? So you've got demand, you've got supply. Anytime that supply is approaching demand, which, obviously if demand goes over supply, you're going to have a blackout. So anytime that demand is approaching supply, there's a scarcity event kicks in. And so that's your total value of lost load, which then adds your ORDC adders to it to incentivize more generation to turn on and also incentivize potentially load to turn off, right, and sell power. So that value of lost load, the concept is really like, hey, it's really costly if there's a blackout, right? Businesses need power to run. Electricity goes into creating pretty much every output, right, in the economy. So if you lose power, it could be really expensive and have all these huge knock-on effects throughout the whole economy. Plus, the most important too being everyone's well-being, right? Like we saw in Uri, you don't want to lose power if it's 20 degrees outside. You also don't want to lose power if it's 110 out. So that's when these price adders will actually kick in. And so the difference this summer though was we had $5,000 prices, which is the price cap, with no scarcity adders, which historically you usually have to get to the price cap. You need some type of scarcity adder.
So, what does the ORDC represent?
So it's really a formulaic component of a pricing mechanism in ERCOT. So, for example, like if based on your physical reserve capacity, so if demand is within like 2,000 megawatts of supply, there's a formula that says, okay, bump up the price adder to $100. We need to incentivize more generation to turn on.
Beyond just the market, the wholesale market,
Exactly.
and what it's saying. I think that something about the electricity market, which is unique, is this combination of demand inelasticity, meaning that usually it might just cost you like a fraction of a penny to turn on your AC. But if it's 110 degrees outside, you're going to, like, in real time, you might be paying like $5. And you don't care because you just want it to be comfortable in your home or in the hospital or whatever it is. And simultaneously, the other challenge is that this market has to clear in real time. There's very little storage, and what little storage there is very expensive. It's not like a supermarket where you can just build up inventory and wait for people to buy it.
Yeah, no, and so that's exactly like the concept of your value of lost load, right? If it's 110 out, some people are going to be willing to pay 20. I think it's like if you're running a basic AC unit or your standard AC unit, it's $20 an hour to run at $5,000, right? So there's going to be some people that are willing to pay that. There's some businesses that are willing to pay that, right? If you're a less energy dense business, so Bitcoin mining, we're pretty energy dense, right? Most of our energy used goes straight into the product we're making. Whereas if you're a manufacturer, you might only use a megawatt, but that, a $5,000 megawatt, you might produce $100,000 worth of goods.
Right. And so I think this is so key that Bitcoin miners have a break-even price where, from a marginal economics perspective, it does not make sense for us to mine above, let's say, $100 a megawatt. But a manufacturing company, because the electricity is just one of their inputs, and they have this value chain, they might be going, their break even for electricity might be like, they would stop at like $20,000 a megawatt, which is completely outside of kind of, then they're competing against somebody who's turning on their AC.
Hmm. Yeah, exactly. And that's where, I mean, these price adders are supposed to incentivize people to either, reduce demand if your business is getting close to that value, and turn on all generation. The difference being like right now, so you've got batteries and certain other generation that's actually bidding in at the price cap. So we're able to hit the price cap without any actual of these price adders.
Interesting. So when we look at like the dispatch curve, basically, you've got generators that are just on all the time, that base load. Then you've got renewables that are on whenever there's wind or sun, outside of our control. And then you got these peaker plants that turn on. And do you think that broadly the break even for turning on a peaker is also $100 a megawatt?
So that like anything, it's a complicated answer, right? There's actually ERCOT actually puts out reports where you can go see which resource type in ERCOT is bidding at what price and what their offer curve is. And you've got generation, like a single generator will have, if you're a natural gas plant, you might have 10 different offer curve prices, because it's kind of like if you're running your card really hard, right, with your gas mileage. You might have, the plant might do, its input cost might be like $20 a megawatt running at a certain run rate. But the second you start ramping up that speed, right, and you try to produce more power, that your break even might go from 20 to 30, right? So then they've got different offer curves based on how much power they actually need to generate at that point in time.
Got it. And then between peaker plants and batteries, what I'm hearing is that there's a big price gap, where batteries have been bidding it at $5,000, and kind of the next generator or technology is much lower than that.
Yeah, and that's where you've got, if you paid attention to ERCOT this in August, right, you've got days where, it's a hot day, there's a lot of demand, but the price of power might be $100 a megawatt, and then all of a sudden, 5 minutes later, it's 5,000, and so ERCOT, the way ERCOT's pricing works, like in a simplistic form, is you've got basically every single generator is putting in a bid saying, hey, we can produce power for X price. And ERCOT's going to then take all these bids and say, okay, how many megawatts do I need to supply power to meet demand at this given amount of time? And that last megawatt needed is the most expensive one, and that sets the price for the market. So at that point, you've got that most expensive megawatt. The second that turns on, that's setting the whole price, and you've got a run up from, potentially from a 5-minute interval from $200 to 5,000, depending on what their offer curve is.
And from an economic perspective, this sends a signal to the market that more power generation needs to be built in ERCOT, or that there needs to be more demand response, and that one program I saw that's really interesting is this virtual power plant with Tesla. Do you want to talk about that?
I don't know anything about
okay.
that.
Yeah, I don't know anything about it other than the headlines on it. But basically the idea is that you've got your car that has a battery in it, and that if you're plugged in at home, the electricity can go from the car to the grid, whereas usually you would conceptualize it as from the grid to the car. Essentially aggregating lots of small batteries into a big battery operation. And I saw some folks saying like, hey, I made money this month instead of paying an electricity bill, which I thought was interesting.
Yeah, so um, I mean, if you're gonna that is one way to add electricity to the grid, right? It's not the most efficient way, right? Like
Yeah.
it's not great to charge your car off of a very efficient gas turbine, right? And then use your car to give power back to the grid, just because that car will never be as efficient as a large scale generator.
And then the transmission of the back and forth.
Yeah.
And I think though that one of the critiques I saw of Bitcoin miners in this was that the opportunities to participate in demand response are not available in the same way to residential homes. And on one hand, I agree that there should be more opportunities to participate in demand response, and that's not really an argument to limit it for Bitcoin miners. But also, I just question the efficiency argument of how many people are wanting to think about the electricity market when they get home from work. And that I think most people just want to turn the light on and have it be cost effective and reliable and clean.
So you can participate with those thermostat control mechanisms to where you'll get a reduced power rate if you're willing to let the power company control your thermostat. Um, I think for a lot of people, it goes back to the value proposition, right? Like, does it make sense? Do I want to suffer in the heat to save like $20 on my power bill? For some people, they're willing to do it. Especially it does conserve energy for the grid. So, if everyone does it, it does help the grid. But going back to value, some people are going to have different values on what they want to put up with.
Yeah, and then there's the other question of what is the root cause. So when we're looking at our decision of what we're going to do in the market, we're looking at the weather. We're looking at the weather both because of the heat driving demand, and then because of the wind, which really just drives a massive. I don't think people realize how much wind generation there is in the ERCOT market.
Yeah, so ERCOT, I I want to say ERCOT's has 3 times the amount of wind generation as like the next 3 states, or ERCOT has more wind generation than the next 3 states combined.
I just want to add, because I think that this has been an issue, is that when we say ERCOT has wind generation, we're really talking about the market. We're not talking about the legal entity ERCOT that is supervising the market. And I think that like folks forget that like that those wind turbines are owned by publicly traded companies, private companies, utility companies. It's not like we have a monopoly, entity, which is some countries do, some jurisdictions do, but then it leads to headlines of, hey, ERCOT is paying Bitcoin miners, et cetera, when really, we're using that terminology to describe a geographic area.
Mhm. Yeah, so overall, this is a really complicated issue. So you've got your ancillary services in ERCOT, right? The reason that ancillary services are needed is because you've got all this unpredictable supply. Being, if the wind's not blowing or the sun's not shining, right, it's harder to predict what the actual renewable generation is going to be. And so to help bridge that gap, if wind underperforms forecasts, ERCOT then utilizes these ancillary services to make up that generation supply. And so ERCOT, they've got a really hard job, and it goes the amount of modeling and work that goes in every single day to get the demand forecast as well as the supply forecast is like a significant amount of work that's been added with renewables.
Yeah, and it's just the then when prices do go up, then everybody starts pointing fingers of, oh, if this was different or that was different, then prices would be lower. But it raises a real question of, is there such a thing as having an imbalance in power generation technologies where I've seen this get debated in the legislature of, we need to have more dispatchable, but non-dispatchable, that is intermittent solar and wind, are being heavily subsidized in the federal tax code. Do you want to talk about the production tax credit and how that factors into kind of the economics of renewables?
Sure. So I don't have a great understanding of the full economics of like the break evens for solar and wind, but just kind of generally speaking, without these investment or the inflation tax credits, Inflation Reduction Act tax
Yeah,
credits.
maybe they need to change the name of that, but yeah.
uh, a lot of these projects aren't economical, right? And then you've got batteries. A lot of what currently makes a battery economical is ancillary services, and batteries are needed too with the solar ramp. So you've kind of got the issue of, renewables are great; they reduce emissions, but they present this new set of problems, right? Where you've got unpredictable generation. And to help bridge that gap, right, you need ancillary services. So it just introduces more complexities to the grid.
Yeah, the solar ramp, I think that Bloomberg article missed, where they were talking about ECRS, and ECRS is this new product within ancillary services that is really focused on resources that or loads or generators that can respond within 10 minutes, because that's kind of the time frame you need when the sun is setting and wind is not picking up enough. And the Bloomberg article kind of portrayed ECRS as in response to Winter Storm Uri, which just isn't the case. I think the response to Winter Storm Uri was about weatherization and being more conservative and procuring more ancillary services. But ECRS is this new program that's focused on the growth of solar. We talked about wind, but solar is on 50% of the day, optimistically, and that ramp is really quite a few times this past summer. That's when we saw prices skyrocket.
Yeah. So I guess just kind of stepping back, right, to ancillary services. ERCOT has several ancillary services. So there's reg up, reg down. There's responsive reserve or RRS, and then there's non-spin, and then there's ECRS. And so each program kind of has its nuances. ECRS was the first program introduced in the last, I think, 20 years in ERCOT. It just came out in June. So the Bloomberg article, they've come out kind of criticizing ECRS and saying, hey, is this an actual service that's needed for grid reliability, or is it just going back to the fight of reliability versus cost, or is it just increasing everyone's cost? And so it's only been out since June, right? And it's been introduced when we were in this heat wave of 105 degrees for basically the whole summer. So it came out. I think it's performed really well, right? Like you've got this. We didn't have any significant blackouts in ERCOT over that time. ECRS has been introduced, and I think it's at this point it probably needs more time to see also how it affects pricing and things going forward outside of these summer periods.
Yeah, and we saw it get deployed, and it just seems like the situations where it gets deployed is the sun is setting, but people are still turning on their AC because despite the sunset, it's still above 100 degrees outside, and then wind is underperforming.
Yeah, so that's the exact scenario, right? When you need ECRS, so it's the goal of ECRS is it's just anything dispatchable in 10 minutes, and so at these, like you mentioned, in these solar windows, at the end of the day, it may not be the hottest part of the day. The hottest part of the day is before the sun sets, but ERCOT's got so much solar that ramps down so quickly, and so you've got probably 10 to 12 gigawatts that ramp down over an hour and a half. And you need something to bridge that gap because that's a significant chunk of demand throughout the day that's coming off very quickly, and that's where ECRS and these other programs help bridge that gap. And ERCOT used it too, right? I think they deployed it 15 times in August.
Yeah, and hindsight, 2020, people can argue about what happened in the market. And there's always room for improvement. But yeah, it does seem like it was a pretty successful summer from a reliability perspective, no blackouts. And then from a price perspective, I also think that um, people are comfortable with surge pricing when it comes to Uber, but when it comes to surge pricing with their electricity, to them it feels like it's price gouging for a necessity of life, right? This is something that has become necessary for folks.
Yeah, so pri- us as retail customers, right? With power at our home, we don't immediately feel any price surges. We have a fixed price contract. We pay that fixed price throughout the year. If you have some significant weather event that does spike prices in ERCOT, maybe the next year you've got some increased prices that get pushed down to retail.
I think the other factor has been when people look at their electricity bill today, um, it reflects where the market was in the past, and where the market was in the past was that natural gas was above $6,
Mhm.
and it's come off that peak quite a bit.
Going back to ERCOT's pricing mechanisms, right? And it's easy to sit back here and play Monday morning quarterback after you've got this significant weather event and you see what happened to real time prices. But the fact is, ERCOT, when you look at energy prices as a whole across the U.S., ERCOT has like between 10 to 15% lower energy costs for retail customers than the rest of the nation, while also having the one of the heaviest penetrations of renewable energy on the grid. And so that I think that's a testament to how well the ancillary services are operating to help, and how good of a job ERCOT does in procuring cheap generation to have this significant renewable penetration and still have energy prices lower than the average costs across the nation.
Yeah, there was an article that was about Elizabeth Warren was saying, Senator Warren was saying, Bitcoin miners are driving up electricity prices in Texas. And I did a quick lookup of electricity prices in Texas versus in the Northeast, where she's from, and their electricity prices are significantly higher. So I was left scratching my head of, okay, how does she reconcile the data to her worldview?
Yeah, I think um, you know it's easy to criticize certain events, but just going back to, hey, how good of a job has ERCOT done managing this grid that's massive, right? The state of Texas is huge. We all know it's the second largest state in the U.S. and it's I think it's the second most populated state as well. And so ERCOT's got this massive job of managing this huge grid. And overall, like when you take a step back and you look at energy costs, right? Like I think they've done, if you can say that energy cost as a whole is cheaper than the rest of the U.S., like they've done a good job.
Yeah, yeah, I agree with that. The other part too, I think when we talk about the effect of Bitcoin mining on the electricity price, one is that ERCOT is such a large market. Texas is such a large electricity market. It kind of seems dubious to suggest that Bitcoin miners are having any kind of effect at all, good or bad, right? Um, and then also that if the primary price setter over the medium term is the price of natural gas, the market for natural gas is even bigger than the market for electricity just globally. When we talk about LNG exports and all of this, that it seems astonishing to me that people are suggesting that Bitcoin miners are moving the price of natural gas.
So yeah, I wouldn't think that we're moving the price of natural gas. I do think that we collectively across the state of Texas, right? If you say that Bitcoin mining's 2 gigawatts and that collectively the 2 gigawatts is going to turn off, I think that does actually create a material difference in price. There's you know there's pricing services out there, and even when you watch ERCOT, just kind of real time operations, uh, if wind underperforms by 500 megawatts, that can you could have a price spike of several $1,000s. And that's because you've then got these batteries or some other generation at a higher price point that has to turn on to meet that wind underperformance. So the fact that you're talking about hundreds of megawatts coming offline and even gigawatts for Bitcoin miners, the curve is so steep At that point, in those scenarios, I think it makes a huge difference in price.
So it really is like, instead of looking at it gross, we got to look at it as marginal, as, what is that extra 100 megawatt? And the fact that Bitcoin miners have an incentive to curtail at a price point that is very, let's like, low. I mean, $100 a megawatt is 10 cents a kilowatt. Like, that's lower than what retail is often paying, or residential is often paying. Um, and then I think the other part of it too. So it's impossible to argue that we're causing the electricity price to go higher than $100 a megawatt, because we're turning off at that point.
Mhm.
What I think maybe the more subtle argument would be that we cause the price to, instead of being negative $5, we cause it to be $10 at night, something like that. Where I'm scratching my head of, well, that might not necessarily be a bad thing, in the sense that we're helping support power generation and the development of that. And there is such a thing as having an electricity price that's too low.
Mhm.
So when we're looking at the price impact of Bitcoin miners, one argument I've heard made is that we're helping support the price on the shoulders, so that power generators are not losing money, and that they have the financial incentive to have the capacity that will be needed at the peaks when Bitcoin miners are turning off. And so we're never really a part of net peak load. That's always somebody else, because we're off long before that.
Yeah, so net load in ERCOT is, your demand less, or it's your demand less what your renewable generation is. And so that's really kind of what drives price. And so Bitcoin miners turning off, like you said, under the retail, what most of us are paying at our home for our home electricity, that's definitely making a big impact on price. And then it's also, it helps incentivize new generation to be built, when a new generator can say, like, hey, do we have some baseline demand overnight, right? Or in these windows of lower power prices that we can kind of guarantee demand. And so, for us, or as Bitcoin miners, we can really soak up some of that excess energy use overnight and help incentivize that new generation to be built.
With the PPA, we're managing that risk. We're also paying that fixed price overnight. So, other miners choose to not have a PPA, and so they're able to benefit from, let's say, $10 a megawatt, whereas we're helping support the power generation assets and paying more than that, and it smooths out.
Yes, with the PPA, I mean, you've guaranteed the generator on the other side of that PPA is guaranteed, hey, I'm going to get this rate for this amount of time. And so that's an easy, right? Like if you're trying to get capital to fund a new project, that's an easier decision when you've got someone on the other side willing to buy all that power. You can consistently model your cash flows, and it's just it's an easier sell to the investors in that project.
Yeah, that makes sense. So, when we look at the development of Bitcoin mining in Texas, it is much greater than any other state. And I think people are asking now, okay, there's the halving next year. Where do we forecast Bitcoin mining going, right? In terms of, we know Riot's going to grow because we've positioned our business to be able to grow. Do you think that there's still a lot more Bitcoin miners entering into the Texas market, or is the bear market helping slow that growth down?
I think there are. I mean, you look at the interconnection queue on ERCOT. There are a lot of people that have signed up to get an interconnection. I think what they say what's in the queue, shown in the queue, maybe 80 to 90% of that actually gets built. But so there is some
Doesn't get
significant or doesn't get built. Yeah. There is some significant megawatts for miners in the queue. So I think, we'll see a percentage of that come online. And the way that ERCOT's looking at these large loads, and this is still a brand new technology, right? Speaking in, terms of how long other technologies have been out there, Bitcoin mining at scale in Texas is maybe, I don't know, 4 to 5 years old. And so there's still some things that the industry is working out, with ERCOT and trying to think of ways to actually utilize this technology for the to benefit the most people across the grid. Because I think this technology, if it's used correctly, right, in terms of helping manage and bridge these intermittent resources, I think it's a huge benefit to the grid.
Do you think there's a scenario where there's so much Bitcoin mining on the grid that the electricity price just never really goes above the break even of Bitcoin miners because they, fall off?
I think that's possible, right? If you look at how pricing is done, and you've got, in theory, if you had so much demand that's going to turn off at a price point, and then that energy can then be used, in theory, that is possible.
It would just be a lot of Bitcoin miners. But I feel like it's plausible if the state embraces it. Whereas if we try to push away Bitcoin miners, they will be more decentralized, which is great for the Bitcoin ethos. But you'll never really have a sufficient concentration of Bitcoin mining activity in any particular grid, such that they are clearly causing a ceiling on the electricity price.
Mm-hmm. Yeah. So this goes back to there's a lot of moving parts here. Right now, some of the best things as a load that you can do is be in ancillary services or SCED, so that ERCOT knows kind of what ERCOT has more control, more visibility into the load, and they know at what points it's actually going to turn off, and it gives them the ability to manage it more. So I think as more of these loads come online and are good stewards of getting into these programs, that's going to give, it's a tremendous tool to help manage the grid and reliability and hopefully reduce prices as well.
It's funny that you mentioned the, Uber surge prices versus surge prices with electricity. I think as a retail consumer myself, I think the main difference is that you don't see the surge prices on on an app on your phone, right? Maybe if we had some sort of screen or some sort of dial in front of our thermostat, it would give us some sort of incentive to not run your AC at 70 degrees when it's 6 p.m. It's still hot outside, but that wind is ramping down and the solar is ramping down. Do you ever see a future where, instead of maybe the suppliers controlling your thermostat for you, but at least giving you some sort of dashboard? Like, because I know yourself, Kevin, you're probably looking at dashboards all day to see what the prices are doing, but at home, we don't have that.
There was Gritty, and it went out of business. Do you want to talk about that?
Yeah, so Gritty gave, to your question on a dashboard, so all this data is public on ERCOT. So I think at some point, maybe we could get Abraham to create a thermostat that incorporates the dashboard into it.
Like if my thermostat told me, hey, it's going to charge you $5 to get this house to 70 degrees right now, I'm pretty sure I'd think twice about doing that.
Yeah. So with Gritty, now going back to Gritty, so Gritty was it was a service that was in place before Uri. It's no longer here because of Uri. But Gritty was, going back to the retail, us being retail users in ERCOT at our homes, we pay a fixed price. So Gritty was the opposite of that. You could actually, you didn't have a fixed price contract, but you were charged based on the spot price in ERCOT. So as a home user, though, it's harder to manage because, we just talked about those price swings, right? You might have in 5 minutes, it could spike $5,000. If you're a home user, I think with your AC at 5,000, it's between like 15 and $20 an hour. And then during Uri, you had this event where you had at the price cap at $9,000. So the price cap used to be 9,000. It's now 5,000. So you then had like a week straight at the price cap, and you had these people that it was cold outside, so they needed to heat their homes, not realizing that the price was $9,000. And I think there was a bunch of headlines in the news. They're hit with like $20,000 power bills. And because of that, Gritty's no longer here, and I think it's no longer possible. I think ERCOT has essentially gotten rid of allowing the retail customer to take on spot pricing.
Right. And even if you had this information going to your phone, if your TV's off, often these devices are still consuming electricity, some much lower amount. And so you'd basically have to, and this is something that we do at Riot sometimes, of go to the breaker and flip the switch and physically, turn it off. And perhaps the technology will be there one day. But my perspective on it is like, wouldn't it be nice if we didn't have to do that, in the sense that even as Bitcoin miners, like, we would rather be mining Bitcoin like at $10 a megawatt than worrying or thinking about, okay, is it -5 or is it 5,000?
Yeah, so we need to get Abraham and start doing a combination of Bitcoin mining with home energy that's controlled by your thermostat.
Yeah, and a digital breaker, so that your house will be blacked out. I mean, that's the other thing too, is that, like, do you want to be part of a rolling blackout because of electricity prices being elevated? And it's like, do you want to opt into it, or do you want others to manage that risk and make it so that you never have a blackout?
Yeah, so I mean, it goes back to value of lost load, right?
Yeah.
And it depends on what someone's willing to pay for it. I think you've got different, there's obviously a whole scale of different users in ERCOT. And there's people that are going to be willing to pay $20 an hour to keep their house cold. And there's people that are willing or wouldn't be willing to do it. And it goes back to, that's how the open market should work. And so I think, it would be interesting to see if that capability comes back.
It's just, yeah, it's challenging to make all the information flow, even for industrial users like us. Like, this is a part of our business. Like, we're building the software to do this. We're working with others who also are focused on this area, and I think that on a napkin it all makes sense of, like, hey, let's have all these residential users, floating on the spot price. But then in turning that into a real product that people are happy about using, I think that's really challenging.
Yeah, I think it too depends on the type of load, right, at your house, because there's some things that you're going to be very inflexible on, right? Your AC for one, or your heat for one, you're probably going to be more inflexible than if you're charging your car overnight.
Yeah.
So I think there's some opportunity for different. Maybe you've got different devices. Maybe you have like a set fee for the first part of for maybe a small piece of your home energy use, and then after that you've got kind of this fixed combination of with something like Gritty, to where you could charge certain things at a different price. But it'd be interesting to see what happens.
I like that. That's pretty innovative. I think that we should put you in charge of market redesign. All right. Do we have any other questions?
Did y'all cover as deeply as you wanted to the headlines that were made and what the real, like, underlying truth is to those? I mean, I heard y'all talk about it, but I don't know if we went as deep into it as you wanted to.
Yeah, we absolutely could. So yeah.
Yeah. Which headline?
So when CNBC and others are reporting that, hey, Texas paid Riot $31 million, do you want to unpack that? Because it seemed like the headline, at least, was kind of misleading.
Yeah, so the headline, totally misleading. ERCOT did not pay Riot $31 million. There was a piece of that. I want to say $7 million was for ancillary services, which ERCOT does pay for ancillary services. But there's the nuance to that headline, which makes it really misleading, is ERCOT paid Riot to stay on. They didn't pay us to stay on, in a sense. They paid us for the optionality to turn us off. So there were times in August, right? Going back to some of the ancillary deployments, I think they deployed it 15 times in August. And so we actually, they executed that optionality and shut us off during those times.
Yeah, and the $7 million that represents a small percentage of ancillary services as a whole, right?
Yeah, from I want to say between July and August, I think total ancillary services in the whole ERCOT marketplace was over $1 billion. And then going back to the August figures, that 31 million. So the remaining piece of that was power that we pre-purchased with our contract or through our contract that we then chose to shut off, not use it for mining operations, and then sell back into the wholesale market.
Right, because as we were talking about the PPA, like we have to buy that electricity, and so we have that obligation, and then we have to look at, is it better to mine with that electricity and generate Bitcoin, or is it better to give it back to the market and sell it? And that's an economic decision that is different than, okay, with ancillary services, the decision making is done by ERCOT. And they're looking at grid reliability. They're not looking at, okay, does this benefit Riot or not?
Yeah. So, and there's times too where ancillary services get deployed, and the price may not be that high because there's different criteria to deploy each service, and they're deploying it not based on price but to ensure grid reliability.
So when we look at the power credits that are the $24 million part of it, the buyer of that is somebody who did not correctly manage their risk, that they're having to go out in the spot market and pay a $5,000 a megawatt. And as we've said, it's not a residential person directly. It's rather their utility company or, somebody else in the wholesale market, perhaps even just a trader who's not consuming electricity, but is, managing a trading desk, that they're the natural buyers of that.
Yeah. So you've got some speculation going on with the traders, and then either way, there's always, no matter how you run your operations, there's going to be someone that's going to criticize you on either side, right? No matter how you operate. In our case, right? So we have the 20 plus million of power that we pre-purchased, sold back at wholesale, that was then used to power so many different homes or businesses. There's a ton of inflexible businesses, right, that are still consuming power at these peak times. Yeah, so you've got a bunch of different businesses that are inflexible loads. They're going to stay on no matter what, no matter how limited of that reserve capacity there is. Whereas, the miners have come in and they've chosen, we could stay on if we wanted to, right? Like we could still mine Bitcoin. It's still profitable because we're buying power at a fixed price. But we've chosen to, it's more profitable in those instances to not mine Bitcoin, and then give that power back to the grid at those times of small capacity or of limited capacity. And so it's overall, it's a net benefit really for everyone. The grid needs those reserves.
Yeah, and the counterfactual I often present to people is, do you want us to be off the grid and producing our own electricity? Because in that scenario, if there's a mismatch between supply and demand on the grid, that power is not available. It's physically separated from the grid because that person doesn't like Bitcoin, and that's just a loss for everyone.
Yeah, I mean, being a public steward, right, on the grid, we're incentivizing that generation to build more generation, and then we're also helping to suppress prices in those those few hours where there is a capacity shortage.
All right. Thanks, Kevin, for coming on, getting into the weeds on a lot of these different topics. We'll do this again because I think that there's a lot to unpack here. I appreciate your time.
Yeah, thanks for having me on, Pierre.
Yeah, sure thing.